Good afternoon. My name is Karena Bell. I'm the founder and CEO of Turtle Bay Payment Solutions, where we advocate for business owners to drive down their credit card processing fees and costs. With me this afternoon is my dear friend and colleague, Sydney Woods, who is a tax planning specialist and the owner of Woods Financials out of Houston, Texas. And I invited Sydney here with me this afternoon there's a couple of reasons. Every time Sydney and I talk, she's always sharing information about tax planning and tax advantages and tax incentives. And I walk away knowing more than when we sat down. And I felt that Sydney's voice, her knowledge, and her expertise definitely needs to be heard by more folks, and especially business owners. And so I've asked Sydney to join me this afternoon to share with us what are some of the 5 most common mistakes that business owners make at the end of the year around tax planning. And with that, Sydney, welcome.
Thank you. Thank you for having me.
Wonderful. I hope you had a good holiday.
Definitely. Yes, I enjoyed the holiday. How about yourself?
Good. We did. We rested, relaxed, rejuvenated, and we're ready to go. We're ready to go into the new year and come in hot. Come in hot.
Oh,
And
yeah.
I'm anxious to hear about some tips and tricks around tax planning as we wrap up the end of the year, and possibly some other tips that we may need to be aware of going into the new year as well. So share with us a little bit, Sydney. What are some of the most common mistakes you see business owners making towards the end of the year, or what they think they know, but they don't actually know and need to?
Yes, absolutely. So some of the mistakes that I see business owners make, one would be, not taking a look at their financials throughout the year, or even having a glance at them at the end of the year to determine, how they're doing this year as it compares to last year. So that's one of the big mistakes that I see business owners make. They're just going through the year, running their business the way, I would say organically.
So as long as the bills are getting paid and the bank account is in the black, they think they're okay, and we'll figure everything out at the end of the year when we do our taxes, whether we're going to owe or not. Or we're thinking we're going to owe. The question is, how much are we going to owe?
Exactly. And not really knowing whether or not those purchases that they're making are having the greatest impact on their business. And it's, they're just making purchase as they see fit, not realizing that there's a tax impact on, those transactions as well.
So I might be thinking about purchasing a piece of equipment for my business or making an investment in my business and thinking I need it now, but actually there might be some tax advantages if I waited until the end of the year, or maybe a different quarter. Is that what you're suggesting?
Yes, absolutely. And that's a perfect example of one of those times that the business owner should contact their tax professional and have a conversation, because they may not need that large of a deduction for the year. They may have incurred enough expenses in that particular category. For example, if they're in the month of June, they may have maxed out where certain deductible categories have phase outs. So it's always good to have a conversation with the tax professional to make sure that you're not incurring more tax deductions than you need, and if those tax deductions are making the best impact on the business and could potentially be more of a benefit in the next quarter or maybe the next year.
Okay. Okay. So what I gathered, and correct me if I'm wrong, there were a couple of points there that were interesting to me. Is it sounded like you would be able to help level out the tax deductions maybe over multiple years versus spiking your tax deductions in a period or a year when you would actually be able to recognize more advantages over multiple years. And I think you were touching on depreciation on physical assets and how you're managing the depreciation of a physical asset. Is that correct?
Exactly. Exactly. Because when you're purchasing things like equipment, those assets are depreciable assets.
Mm-hmm.
And when you're depreciating an asset, the depreciation could really max you out by itself on your tax return. And so anything else that you're spending throughout the year, you're really not, reaping the benefits of. So you might want to just be, I would say business owners in that instance, when they're purchasing large equipment, definitely seek financial advice, because you want to make sure that you, as well as your tax professional, are doing an analysis to see how that's going to impact the business and, creating either a gain or loss. You never really know how that's going to play out at year end.
And I find that interesting because typically when business owners are making purchases, they're talking to possibly their financial advisor or financial planner,
Yeah.
and that, but I don't hear about them talking to a tax advisor as well. And oftentimes it seems that they inform their tax advisor after the purchase has already been made to make sure that things are lining up in their taxes, when it actually should be a conversation along with the financial advisor.
Yes.
Okay.
Yes.
Okay. So
That
it's more
should
of
be
an upfront conversation versus an after the fact conversation.
exactly, because the financial advisor, they're looking at the money aspect.
Mm-hmm.
It's not necessarily the impact on taxes, whereas the tax professional is going to make sure that you're meeting your goals as a business owner when it comes to taxes, that you're aware of the impact that certain purchases have on your business, how that affects any business transactions that you may be looking to make within the near future that could play a part in having too many deductions or not enough deductions. There's just so many different aspects that can go into this.
Yeah, and I see that the more and more I talk to you and the more you share with me, and that's why I'm so grateful that you came on today to share what the tips and tricks. Is it seems like a lot of business owners are hesitant to talk about taxes because the fear of the unknown.
Yes.
Or I don't want to talk about it because I know I'm going to pay. I just don't want to know how much I'm going to pay until the end of the year. And where it really should be, I want to talk about taxes because there's so many incentives out there that business owners could or should be taking advantage of. And we don't know what we don't know. And oftentimes I think taxes are scary to a lot of business owners, especially new business owners.
Yes.
That we really should be having more. And I know as fellow business owners, we talk about this frequently, is the advantages and the incentives that are out there. And that's where I think there needs to be a shift in the mindset that a tax advisor is really an advocate for you to make sure you're paying the lowest amount of taxes as possible as you move through the year, especially as you are scaling and growing your organization. I see where that is so critical, that it's a conversation that should be had at least monthly, if not more frequently, especially if large purchases are involved or frequent purchases are involved. That's definitely a conversation. And I don't want to distract from your list. So
No, I totally agree with you. This should definitely be an ongoing conversation, definitely depending on the size of the business. And the unknown is a really, really big point, and I'm glad you brought that up, because just thinking about the unknown and turning a blind eye to the tax conversation, you know, a lot of businesses don't realize that taxes alone can put you out of business. If you're not planning correctly and you're not, and that tax bill gets too high and you're not in the position to pay it, I mean, the IRS may not come after you, but it'll have that great of an impact on your business that you'll be forced to shut down because you won't have any capital to keep the business going. So it's very important to have that conversation, not have the fear. There's always estimated tax payments, making those on a quarterly basis to try to prepay, you know, those taxes before the end of the year. You know, there's so many ways to get that tax debt down.
Yeah, and I know as business owners, we talk about this frequently, is we surround ourselves with experts that fill our gaps.
Mhm.
And one of my favorite phrases is, they help me with my blind spots. I don't know what I don't know, and they're seeing things I don't see that I need to know.
Yes.
And I think tax planning is one of those. I did not give it the priority that I should have in the past.
Mhm.
And since talking with you, have given it a significant priority, especially because of the incentives and the advantages that come into play, and being very well versed, not myself personally, but being aligned with someone who is, and having those frequent conversations where we know exactly where we are financially.
Yes, and that's a great transition to my next point. You know, evaluating your accounting process on an annual basis. You know, a lot of small business owners, they start out using a spreadsheet or just throwing receipts in a shoebox. And as the business grows and as, you know, their expenses start to change, you know, they might see that it makes more sense to upgrade to, you know, some sort of accounting software so that they can have a better grasp on where the money is going, what money is coming in, preparing for those business transactions that they're looking to make in the coming year or in the coming months for their businesses, to give them an idea. And again, plan with their tax professional. How can they reach that goal of whatever that transaction may be? You know, they may be looking to lease some space to expand their business. They may need to grow into a larger warehouse. You know, you never know what things may come up. And if everything's in a shoebox, what are you going to do when
You're
it's
not
time
going
to have that conversation?
to. Yeah, you're not going to know where your business is at financially with the shoebox accounting and the spreadsheet accounting, and something that was brought to my attention, I didn't realize how critical it was, and I do it. Uh, Previously, I didn't do it as consistently as I should, but the reconciliation. I personally use QuickBooks,
Yeah.
and I thought, oh, I'm good, I'm covered. And I heard you speak in another platform about the monthly reconciliation, and I had an aha moment where I did a check, a self check, and I said, I'm not reconciling as much as I should, and then started put that into practice and made
Yes.
that part of my monthly activities. And you pointed out a number of areas where that simple action of monthly reconciliation, again, you could be bleeding as a business. And if you're looking at your finances at least monthly, you're going to be able to stop that bleeding very quickly versus looking at something semi-annually or annually. You could lose thousands, tens of thousands, or even more than that, depending on the size of your business and the activities within your business if you're not keeping tabs on the activity.
Yes, absolutely. And I love that that created a light bulb moment for you. That's awesome. Yeah, that doing those reconciliations, like you say, is extremely important. I always like to make a point for those using, QuickBooks or any platform that you may use to do your accounting with. The same issues can arise. You're creating invoices out of the software, your clients making payments, you have automatic downloads that are coming in from the bank. The accounting software is matching payments or matching those deposits automatically for you. You're also entering those deposits manually into the accounting system, not realizing that the download has already picked that up. Now you have two deposits for the same invoice, and you've just duplicated your income. Just that easily. And how many times has this occurred throughout the year and you weren't aware?
I would think that's a pretty common occurrence.
Yes, very
it's so
common.
easy. It's so easy.
Mm-hmm. Exactly. And so it's good to be diligent as the business owner, but then that's also another opportunity to touch base with your accounting professional. So we're moving back to the accounting piece and talking to your accounting professional, allowing them to do at least a cursory review of the activity on a quarterly, semi-annual basis, whereas you're reviewing it more frequently. But you also want to have a second set of eyes to see the things that you don't see, because you're looking at the same information day after day, and it's all going to look the same over time. So having someone who's objective on the outside, looking at that information with you, they can find the things that you weren't able to find.
Yeah, and most business owners that I talk to and work with are not accounting experts.
Yes.
Myself included.
Yes, so true. And even the accounting experts, I mean, I can say the same for my business. I comb through things as frequently as I can, and I'll put it down, come back to it a month later. I always go back to the beginning. Every time I pick it back up, I go back to the beginning and I find things that I missed the last time that I looked. So that's a good tip. Don't just start from the point you left off. If the last time you reviewed in March, don't start in April. Go back to January and look again. You never know what you might find.
No, that's a good point. That's a really good point.
Yeah.
Because I know whenever I do a reconciliation, I always put a line in the sand and then move forward from that. And then at the end of the year, I will go back all the way to the beginning and then move forward.
Yes.
But, yeah, I see that, because I'm a checker, a double checker, and a triple checker too. So.
Oh yeah. And then I like to just pull random accounts out, just to, I see a number and I'm like, wow, that number looks interesting. It may look kind of high, it might look kind of low, and it's like, let me look into this account to see what's actually in there, because you never know what might accidentally get, recorded in the wrong line item. So you want to dig into those numbers periodically as well. Just take a look at the profit and loss, give it a review just at a glance and see what each different category is looking like.
Yeah, because that's I think as a business owner, we should be familiar with our balance sheet, our income statement, and our P&L statement month over month over month, because that's going to tell you how the health of your business, how healthy is your business. If the numbers are going in the wrong direction, that should be an immediate indicator that there needs to be some changes made within the organization. Versus, to your earlier point, you may get too far down the road to recover, and it could be deadly mistakes that were made along the way that caused the business to shut down as a whole.
Yes, definitely. It's not always about the bank account and the dollar amount that's there. And that does not always determine success. You may have a lot of money in the bank, but if that P&L and balance sheet don't reflect or isn't being maintained properly, then that can cause a big problem.
Mm-hmm. Yeah, and I think, again, business owners are, if we're in the black, if the bank account is in the black, we're good.
Oh yeah. Oh my gosh, we are doing well. We're moving in the right direction.
Surprise.
Yes. And before you spend it, make sure you pay some to the government.
Mm. Yeah, I've always heard take 40 to 50% and push it off to the side. That way, no matter what tax bracket you're in, that way you know you're okay. And at the end of the year, you're lucky if you have excess or surplus.
Yeah, exactly. If you don't have to touch that money, then that's awesome. But it's good to have it there as a safety net for sure.
Well, and then you would be allocating that on a quarterly basis anyway for the quarterly tax disbursements.
Yes, definitely. Yeah, taking a percentage of the bottom line. Some people like to just take it out of the be safe. Some people will take it out of the net. It just depends on what the best practice is for that particular business.
Do you have a specific recommendation, or it just depends on the business and what the owner's appetite is for?
I think it depends on the business, because a lot of, well, I won't say a lot of businesses, but some businesses will choose to forego their refunds at year end and just roll them over to the next year and use it as a estimated tax payment for the coming year. And so then that'll give them a little cushion to work with as they work through the year. And then some just like making the recommended estimated tax payments that their tax professionals give them, just so they can reach what the IRS considers a safe harbor. That's like the bare minimum you will need to make to prevent penalty for underpayment. So, there's so many ways to go about it.
And business owners obviously can overpay to make sure that they're not underpaying by the end of the year. So they're not owing at the end of the year.
Exactly.
If they know that their business is going to fluctuate potentially significantly throughout the year, they may front load, or, out of the 4 payments, 2 of them may be overpayments just to make sure they're covered by the end of the year. Yeah,
that's definitely true. And then some take the approach, which is another tip that I have, in the last month of the year, look at those things. If you feel that your net income is a little higher than you would like it to be, look at those expenses that are coming up in the month of January. Prepay those in the month of December.
Pull them in.
Yeah, pay them in December so that you can utilize that tax deduction for the current year versus waiting for, the next year to roll around. So that's always an option as well, which a lot of people don't think of.
Yeah, this is why we need a trusted tax advisor in our pocket. That's for sure. That's for sure. Now, Sydney, you do both accounting and tax planning, correct?
Yes.
Okay.
Yes, I do. Yeah, I've been in the business for over 25 years now. So I've done my share of accounting, as well as my share of tax. I actually started on the tax side, and some people won't believe it when I say that I was preparing taxes at the age of 13. That's how I got those big ticket items that you want as a child.
So you were an entrepreneur at a young age.
Yes, it wasn't something that it wasn't something I planned on, but it's something that was definitely beneficial and kind of set the pace for my career through my education.
Well, it sounds like you found your passion and your purpose early on in life.
Yes, definitely. It was just exciting, intriguing. It was always different. There was nothing mundane about it. And, I picked it up, started helping out in the family business, then moved on to taking accounting classes in high school, and then from there majored in accounting. So it was definitely.
I would think it's a bit of a challenge when you're working with a new business to find all of the advantages that you can, or the incentives that you can, to set them up, and then
Yes.
continually take advantage of those as they move through the year and progress.
Definitely. Yeah, I try to stair step and just add more and more expenses over time. I never want to overwhelm the business owner and give them this laundry list. So I pull out a couple of key common expenses for them that they can easily keep track of through the year. And then, as things change, like you mentioned, I'll add on additional expenses for them and have them either prepare, to pay for those items, or be more mindful in the coming year when they're paying for those expenses.
Gotcha.
Yeah.
All right. Well, Sydney, this was all amazing information. Do you have any closing thoughts for the folks that are watching today, and any last moment tax tips for the end of the year? We're rolling up fast.
Yes. Oh my gosh, we have like 3 days left now. I would say it's never too late. Don't panic. Just sit down, have a cup of coffee and your favorite dessert. If you like a glass of wine, you can do that as well. Take a look at what you have. Make an initial analysis. There's probably not enough time to have a conversation within this year, to have with your tax professional, but see if they have some time in January as they're gearing up. And maybe they just, will have a brief conversation, have all your questions ready to make it easy for them, and get ready to go.
Yeah, because as you said, we're rolling up on the end of the year. That for those that don't have a tax advisor currently, it would be recommended to reach out to Sydney Woods.
Yeah.
Specifically. You work across the U.S., correct?
I do, yes.
Or another tax professional that can do an assessment of the previous year and help guide you into the new year and beyond.
Yes.
Sure. Definitely another expert that every business owner should be partnering with, and making sure that, because we're all in business to do well for our business and for our employees and our families.
Yes, we are. Yes. Definitely have a conversation with somebody. I am available. I work virtually. I've been virtual for about 10 years now, at the request of my clients. So I do have experience in that space. So I'm happy to help and have a conversation with anyone who, may have any questions.
What's the best way for someone to get a hold of you, Sydney?
I would say Instagram is probably the easiest to get a hold of me. My Instagram is Ms. C. Woods, and I have a link in my bio. They can schedule a strategy session, and we can sit down, have a conversation to see what their needs are and see how I can help moving forward.
Fantastic. That is amazing. Sydney, thank you so much for joining me this afternoon. I really appreciate you taking the time and, again, sharing so much information in a brief amount of time. And hopefully we can have some more conversations and share more with our business owner audience.
Absolutely. I look forward to it.
Great. Thank you so much, Sydney.
Thank you. Have a great day.